Yeah, what's up, everyone? Imagine this. Bitcoin just logged its worst first 50 days to a year ever, down 23% year to date in 2026. January bled 10%, February is already down 15%, and we're not even done with the month. First time in history with back-to-back January and February declines. If you're holding BTC right now, you're probably feeling that gut punch. But hold up. Before you panic sell or swear off crypto forever, stick around. Today we're breaking down exactly what's happening, why it's historic, what the data really says, and why history shows these moments can flip into massive opportunities. If you're in crypto for the long game, smash that like button right now if this drawdown has you stressed. Subscribe and hit the bell so you never miss these real talk updates. Let's dive in. Okay, quick context so we're all on the same page. As of mid-February 2026, Bitcoin's sitting around $67,000 to $68,000 after peaking over $126,000 back in October 2025. That's a brutal 47 to 50% drop from ATH. But the real headline? Checkonchain data confirms this is the weakest start to any year in Bitcoin's entire history. Worse than 2018, worse than 2022. And get this. Post-election years like 2025 were supposed to outperform, but last year BTC dropped 17%. Now 2026 is piling on. Traders use this 50-day index from Checkonchain to measure cyclical drawdowns. In a typical down year, it's around 0.84. Right now, Bitcoin's at 0.77. That's deeper pain than average. So, yeah, it's rough. But rough doesn't mean over. Let's break it into the key facts you need to know. Point 1. Historic back-to-back declines. Never before has Bitcoin dropped in both January and February. Years like 2015, 2016, and 2018 had ugly Januaries, double-digit losses, but February always bounced back positive. Not this time. If February closes red, it's the weakest consecutive monthly performance since 2022's bear market lows. Why it matters? It shatters seasonal patterns people relied on. Point 2. The scale of the drawdown. Down 23% in just 50 days. For perspective, that's steeper than most early year corrections. We're talking deeper than the typical down year benchmark. Quick example. Remember early 2022? BTC corrected hard post-ATH, but this feels faster because of macro pressures piling on. Point 3. Broader market disconnect. Bitcoin's decoupling from gold. Gold's up big this year, and correlating more with tech stocks and Nasdaq. It's acting like a risk asset right now, not digital gold. That's why when equities wobble, BTC gets hit harder. Point 4. Post-ATH reality. After that insane 2025 run-up to 126K, corrections were inevitable. Leverage got flushed, open interest crashed, liquidations hit billions. This isn't a death spiral, it's deleveraging. History shows these flushouts clear weak hands before the next leg up. Quick myth busting, because fear loves bad takes. Myth 1. Bitcoin's done, it's going to zero. Wrong. Google searches for Bitcoin going to zero are spiking like post-FTX levels, but on-chain data shows long-term holders aren't dumping en masse. Institutions are still in. Some whales are even quietly accumulating at these levels. Myth 2. This is worse than every past bear market. Not quite. The percent drop from ATH is big, around 50%, but duration-wise, it's early. Compared to 2018's 84% drawdown over a year plus, or 2022's prolonged bleed, fast corrections often recover faster. Myth 3. Post-election years always crush it. No exceptions. History says they tend to outperform, but exceptions happen when macro headwinds like rates, liquidity, geopolitics dominate. 2026 is proving that rule isn't ironclad. All right, actionable stuff, because watching red candles sucks, but doing nothing feels worse. Tip 1. Zoom out on your time frame. Don't check prices hourly. Set alerts at key supports like 62K to 65K. Why? Emotional trades kill portfolios. Zoomed out, you see Bitcoin's still up massively long term. Tip 2. Dollar cost average if you're bullish. These dips are where legends buy. Start small, $50 to $100 weekly. Curiosity spark? What if this is the buy signal before the next halving cycle echo? Tip 3. Rebalance your portfolio. If BTC's overweight from 2025 gains, trim elsewhere and add dry powder here. Motivational line? The best investors buy fear, not euphoria. Tip 4. Study on-chain metrics. Track the Checkonchain index, whale wallets, ETF flows. When fear peaks, fear and greed at extreme lows, opportunity often follows. Stay informed. Don't just react. Real quick story. After the 2022 FTX crash, Bitcoin bottomed around 16K. Most people panicked out, but those who held or bought the fear, they saw plus 400 to 500% gains into 2025. Same pattern, extreme fear, flush, then recovery. This 2026 drawdown feels similar, macro-driven, leverage purge. If history rhymes, the rebound could be epic. Bonus nuggets. Eric Trump recently said on CNBC he's more convicted than ever that BTC hits $1 million despite the dip. Big names still believe. European ETF flows stayed positive even in this sell-off. Retail panics, but smart money holds. Warning, if we break 60K hard, deeper pain possible, 55K zone. But reversals often start from oversold levels like now. Lesser known hack, watch gold to BTC ratio. If gold keeps outperforming, BTC might lag short term, but mean reversion trades love that setup. So to recap, Bitcoin's having its worst 50-day start ever, down 23%, back-to-back red months, deeper drawdown than typical bears. But history screams, these are the moments that separate holders from quitters. The flush is painful, but it's clearing the deck for what's next. If you're still here watching, you're tougher than most. Drop a comment. Are you buying this dip, holding, or waiting? What's your price target for end of 2026? Like this if it helped calm the nerves. Subscribe for more no BS crypto breakdowns. We've got a deep dive on potential recovery triggers coming soon, so don't miss it. And share with that friend who's panicking. You've got this. Crypto's volatile, but the long game rewards patience. See you in the next one. Stay strong.